All right, let's talk Dutch Bros. Today, we're diving into the drive-thru and cracking open the books on their latest quarter. We're going to break down their really impressive Q3 2025 performance, and we're focusing on the key numbers and insights that came directly from their CFO, Josh Gunzer. So, here's the game plan. First, we'll hit that high-level financial snapshot. Then, we're going to dig into the economics of what makes a single shop tick. After that, we'll look at their big plans for the future, and we'll wrap it all up with their updated forecast for the whole year.
Okay, let's get right into it. The top-line numbers for the third quarter, well, they paint a super clear picture of a company that has some serious forward momentum right now.
And the headline number? Whoa, it's a big one. Total revenue for Q3 hit an incredible $424 million. Just stop and think for a second about how many coffees, energy drinks, and muffin tops that is. It's massive. But here's what makes that number even more impressive. It's not just a big figure sitting on a page. That $424 million represents a 25% jump in revenue from the exact same time last year. I mean, that is a powerful growth story right there. And you might be thinking, okay, they're just opening a ton of new stores, right? Well, that's not the whole story. Their existing company-run shops saw sales climb by a remarkable 7.4%. This tells you their established spots are actually getting more popular, not just treading water. So, what's the engine behind that growth? This is the crucial part. It's being driven by a 6.8% increase in actual customer visits. This means more cars are pulling into the drive-thru line, which is just a fantastic sign of real organic demand for the brand. So we've seen the huge revenue numbers, but how does that actually translate to the bottom line? Let's pop the hood on an individual Dutch Bros shop and see exactly where all that money is going. This breakdown is super interesting. For every single dollar that comes in, think of it like this. About 26 cents goes to the actual stuff, the drinks, the food, the cups. Another 27.5 cents goes to paying their baristas. And then about 17 cents is for rent and keeping the lights on. This little formula is the core of their business.
But, it's not all smooth sailing. The CFO is pretty clear about some headwinds they're watching. The cost of coffee is expected to keep climbing, their new hot food program comes with its own expenses, and some rule changes in California are going to increase their payroll taxes. So definitely some challenges to manage.
Okay, so let's pivot from what's happening now to what's coming next. Dutch Bros is basically pulling two giant levers to keep this growth engine running hot, a new food program and a very aggressive plan for opening new shops. First up, let's talk food. The early results are in from the shops that have the new hot food, and they're seeing about a 4% lift in sales. That is a really significant boost, and it proves that customers are totally eager for more than just drinks.
And what's really cool is how that 4% lift is happening. About a quarter of it is from new visits, people showing up who might not have otherwise. But the lion's share, 3/4 of that lift, is from people who are already there just adding food to their order. They're spending more each time they visit.
Now for that second lever, pure raw expansion. I mean, just look at this roadmap. They just crossed the 1,000 shop mark. They're on track to open 160 new locations this year, and they're not slowing down. They're actually speeding up to about 175 new shops next year, all on the way to this massive goal of over 2,000 shops by 2029. So you take all of this, the strong performance, the clear growth strategy, what does it all mean for the rest of the year? Well, it means the company is feeling confident. So confident, they're actually raising their official financial forecast. And here's the new guidance. They've bumped up their full-year revenue projection to over $1.6 billion. They now think same-shop sales will grow by about 5%. And they also raised their outlook for adjusted EBITDA, that's a key profitability metric, to nearly $290 million. It's just a crystal-clear signal of their confidence. This quote from the CFO, Josh Gunzer, really ties a bow on the whole thing. He's basically saying, this isn't a fluke, it's not a one-time thing. He believes their business model is built to deliver consistent, dependable results for years to come. That is confidence. So this leaves us with the one big question, right? Dutch Bros is in this incredible high-growth phase. They're expanding their footprint and their menu at a blistering pace. But at the exact same time, they're facing these very real cost pressures. The ultimate test is going to be whether their powerful growth formula can keep outrunning those rising expenses. And that's the dynamic we'll all be watching.